Welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamoan, and today we're diving into some significant updates that are shaping the real estate landscape here in Ontario. In this episode, we'll start by discussing the impact of the Bank of Canada's recent rate cut on the real estate market. This is a hot topic that everyone is talking about, so let's get right into it. On Wednesday, the Bank of Canada cut its benchmark interest rate by 25 basis points for the second time this year, bringing it down to 4.5%, its lowest since April 2023. This move was widely expected by economists, who are forecasting further cuts through 2024 and possibly into next year. But what does this mean for the real estate market? First off, let's talk about the immediate effects on home buyers. Clay Jarvis, a mortgage and real estate expert at NerdWallet Canada, points out that this 25 basis point cut is unlikely to unleash homebuyers' pent-up demand. The overnight rate, which now sits at 4.5%, primarily impacts variable mortgage rates. These rates should decline by 25 basis points in the next 24 hours. However, even with this reduction, variable rate mortgages at Canada's biggest banks will still be above 6%. Moreover, getting approved for one would require passing a stress test at 8%. Such a high qualifying rate significantly reduces the amount a borrower can be approved for. Fixed mortgage rates, on the other hand, remain much lower than variable rates, being offered at well below 5%. Yet, these rates haven't been low enough to get the market moving, according to Jarvis. Until variable rates fall by at least another 1%, they won't provide a more affordable option than what's already available. Jarvis adds that this might require another 4 or 5 Bank of Canada rate cuts. Penelope Graham, a mortgage expert at ratehub.ca, offers a slightly more optimistic view. She notes that those who have stuck it out with variable rates will see their monthly payments reduced again, with more of their payment going toward their principal. Yet it remains to be seen whether this second cut will be the incentive homebuyers need to re-enter the housing market. According to ratehub.ca's mortgage payment calculator, today's 25 basis point cut would lower the variable mortgage rate of a home priced at the average $696,179 to 5.45%. This means that the homeowner will pay $95 less per month or $1,140 less per year on their mortgage payments on a 5-year variable rate of 5.7% amortized over 25 years. The Chartered Professional Accountants of Canada also weighed in, noting that Canadians with variable rate mortgages can breathe a sigh of relief, expecting lower monthly payments. Those with fixed rate mortgages should also see benefits if the downward trend continues come renewal time. For Canadians whose top priority is saving to buy a home, the lower rates will significantly reduce the cost of borrowing. Karen Yalewski, Chief Operating Officer of Royal LePage Real Estate Services Limited, adds that the second cut to the overnight lending rate sends a concrete signal from the Bank of Canada that the economy is moving in the right direction. This is something many hopeful buyers have been waiting for. With mortgage qualification thresholds continuing to come down, sidelined buyers may have the confidence they need to make their return to the housing market. Yalewski expects the rate cut to prompt a slight boost in activity in the short term, followed by more robust buyer demand in the fall. She also mentions that some much-needed inventory has been building in major markets over the last few months, giving buyers more options to choose from. Victor Tran, a mortgage and real estate expert at rates.ca, says that for every 25 basis point drop, a homeowner with a variable rate mortgage can expect to pay approximately $15 less per $100,000 of mortgage in monthly payments. Tran notes that in terms of the broader housing market, the rate cut isn't likely to spur much activity, as many household budgets are still too tight, and buyers are willing to wait. He believes we would likely need to see another 25 to 50 basis point decrease before there is a significant uptick in sales activity. Rebecca Casey, president of the Canadian Mortgage Brokers Association of British Columbia, views the back-to-back cuts as a positive step towards alleviating financial pressure on mortgage holders, borrowers, and first-time homebuyers across British Columbia. Despite no significant changes to fixed mortgage rates in the short term, variable rate mortgages and home equity lines of credit will benefit from the drop as the prime lending rate decreases. This is positive news for borrowers. Avery Schenfeld, chief economist at CIBC Capital Markets, mentioned that mortgage interest is one of the sources of pressure tied to inflation. The much-anticipated quarter-point cut opens the door to a further cut in September, which could ease financial pressure on Canadians even more. In another significant development, the combined value of Ontario's real estate has now been estimated at a staggering $3.14 trillion. According to the Municipal Property Assessment Corporation, this new valuation marks an increase of $42 billion from the previous year. This data highlights the continued growth and resilience of Ontario's real estate market. Toronto, in particular, saw a notable rise in property values, with an increase to $9.93 billion. This surge can be attributed to new construction projects and ongoing developments in the city. One such example is the new construction at 407 Dundas Street West in Oakville, which has significantly contributed to the overall rise in real estate values. The Municipal Property Assessment Corporation's report underscores the importance of new construction and development in driving up property values across the province. These projects not only add to the housing inventory, but also boost the local economy by creating jobs and attracting investments. Such a substantial increase in the combined value of real estate is a positive indicator for investors and homeowners alike. It reflects a healthy demand for properties and a robust market that continues to thrive despite economic uncertainties. For those looking to invest in Ontario real estate, these numbers provide a compelling reason to consider entering the market. The report also serves as a reminder of the critical role that urban development and infrastructure projects play in shaping the real estate landscape. As municipalities continue to grow and expand, the value of properties in these areas is likely to keep rising, offering promising opportunities for future investments. That's it for today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found our discussion on the Bank of Canada's rate cut and the new valuation of Ontario's real estate informative. As always, stay tuned for more updates and insights on the ever-changing real estate market. Thanks for listening, and we'll catch you in the next episode.